Now it is live streamed. Let us so let us start with the prayer first.
Yeah, sure.
Center for Educational Initiatives and Research, CEIR Global Trust, was started in 2009. Facilitate the evolution of positive and progressive schools through a passionate commitment, practice, and approach. Most trusted organization for educators across India and its mission is to improve the overall K-12 school culture and performance by empowering practices in education. CEIR has conducted many extraordinary programs for the target groups right from K1 to K12. The ultimate aim of CEIR is to create a CEIR Center of Excellence by 2030. A perfect home away from home to its members. All the activities of CEIR is supported by Veda Handwriting Lab. Veda offers multiple programs backed by scientific research for students and teachers. At Veda Handwriting Lab, we say good or bad handwriting is an existing event. There is only trained or untrained handwriting. To make it possible, Veda Handwriting Lab has developed a training device called Medical Memory Board for faster and long-lasting results among students and teachers. We have specific programs for teachers, students, and the schools. Success is my handwriting. Success is my handwriting.
So now let us officially start the program. Today's moderator, Shalini ma'am, she is the founder director and principal of Kigani Global Coimbatore, and she is our general convener. I welcome Shalini ma'am to introduce the guest and start the program. Ma'am, please.
Thank you, Dr. Sreesan. I think the guest is finding some difficulty in logging in. There is some problem with there is some problem with the link. It seems.
But this is not audible. I think there is something wrong, Sreesan, that we'll have to find out where the problem is.
Okay.
You are not able to hear me?
Yeah,
Yeah,
no,
now I can hear, sir.
But anyhow, even myself that I can't hear, Sreesan, that's.
Okay.
Can you go check if you don't mind?
No, because I'm traveling, sir, so my network is actually.
Okay.
Shalini ma'am, you can start.
Yeah,
You're
okay,
audible.
okay. Okay.
Yeah, proceed, Shalini, please.
Good evening to all the stalwarts of educators in the educational sector. And in fact, teachers are one of the most influential people in our society. But today's program is about financial management. In fact, study says that financial woes are the frequent issues observed with teachers, and studies also reveal that they engage in different loans. From this perspective, there were few studies aimed to determine the lifestyles of teachers that influence their financial management. They have the overwhelming stress of their financial well-being as they are not satisfied with their financial situation and afraid of future financial concerns. Well, this is not my opinion at all. It is the research and studies done by many people overall. And the underlying statement is spending is always quick and unfortunately earning is slow. So, CEIR always plans programs for educators with a holistic view. When we cater to an holistic development of children in schools, we should definitely cater to an overall development for educators, be it mental wellness, upskilling oneself, physical health, and of course, not to leave behind the wealth wellness. And CEIR is proud to be one amongst the first organization catering to financial management series for educators. One of the most prominent financial management lessons from Vedas come from the Rig Veda, which advocates the conservation of resources, both physical and financial, to take care of one's future requirements, how to work smartly on accumulating and preserving their wealth so that they can fulfill their present day commitments while making sure that there is enough financial buffer to take care of the future needs. Now, to do that, you must have a balanced outlook and try to live within your means. Doing so will allow you to envision one's future and also take the required steps to transform your vision into results while attending to the tasks at hand. So, this is how the process of financial planning works, the Vedic way. And who do we have here today to enlighten us on this Vedic way? Uh, Mr. Manoj Mullan, who founded Capricorn Mindframe, a financial advisory and wealth management company registered in Chennai, India in the year 2009. Uh, is he here?
He's here. He's here. He's a co-host now. Ma'am, he's here. He's a co-host.
Okay, okay. Am I audible? Am I audible? If
Yes,
you
yes,
can
yes,
just raise your,
yes, yes.
chance. The audience, am I audible? If it's in
But
the
check
chat
it
box.
whether
I think Mr. Manoj is finding some difficulty in, logging in.
So Manoj, can you hear?
Okay. I think Mr. Manoj, can
Your
you just
mic is
see,
muted.
you can log out and maybe you can log out and maybe log in once again. Yeah, can you hear me, Mr. Manoj? Your audio is not working. Okay. Would you like to log in and log out?
There's some issues with his mic, ma'am. Microphone.
Okay. Maybe you could just connect with your mobile if possible. No, we can't hear you. So
No,
sorry.
no.
No, we can't hear you. Maybe your Bluetooth is on. Could you just check your Bluetooth or something like some other devices, external devices? Or you could just log in through your mobile if possible. So meanwhile, while Mr. Manoj logs in, I'll just give you a brief idea of who he is. Mr. Manoj Mullet founded Capricorn Mindframe, a financial advisory and wealth management company registered in Chennai, India in the year 2009. With over 20 years of wealth and portfolio management expertise, he has been instrumental in creating wealth for individuals, trusts, and institutions alike. His previous assignments include AVP, HSBC Premier and Head Private Clients Group, Aditya Birla Wealth, Chennai and rest of Tamil Nadu. Capricorn Mindframe manages and advises clients out of 4 offices in India with $65 million of assets under advice, AUA. Their clientele are spread across the world, 35% being non-resident Indians, out of which 45% are from Southeast Asia. The combined management of Capricorn Mindframe has an impressive 65 years of combined experience in financial advisory, private banking, asset management, private equity, angel investing, mergers and acquisitions, credit underwriting, debt syndication, and structured finance solutions across various markets, which empowers everyone to offer solutions that positively impact the lives of the clients discerning at every stage of their lives. It's so wonderful to have you here amongst us, Mr. Manoj Mullat. And here you are to give us an idea how to utilize the green energy as money is termed in our Vedic scriptures. So over to you, Mr. Manoj. I'm so sorry that you had to face some technical issues.
Yes.
Yeah, now it is perfect.
Yes. Nevertheless, thank you so much. And thanks for being patient with me on this. So let me just allow me a sec more, please. Just.
Sure. Maybe we can stop the slide and
Yeah.
Yeah. Is the screen visible to all of you?
screen is visible, yes.
All right. So thank you so much, Mrs. Shalini Menon, for the invite to address the most deserving category of probable investors in the country, as well as in the entire world, I would say, the educators, right? So all of us are what we are because of our educators. And this is also an opportunity for somebody in my profession to give them back or in a way of paying respects to people in the educator community. And once again, thank you so much. So, so this important topic is this holds a lot of relevance, especially in today's context. I remember those days when I was in school and our syllabus was nothing but what NCERT taught us, right? And teachers did not have time to actually get out of their textbooks to teach us. Of course, we had the libraries for reference. But beyond all that, they did not have time for themselves, and they were completely engaged with children this has been time immemorial. And I remember for a fact that my teachers today, who are pretty much aged, have started financial planning at a very late part of their lives, right? After 50 and 55. So pretty much this topic holds a lot of importance because now that, over the years, after starting the company in 2009, and for what I am today, I think this is a way of giving the teachers of today. Probably this is my way of teaching the teachers of today, who are probably my age or much younger than me in terms of age, but nevertheless is a good start. So, financial wellness for educators. This is not just one topic in itself. It's a summation of many things to probably learn, right? So what are the concepts in financial management or financial wellness, or how is it essentially defined? Or what are the best ways of defining financial wellness? Is something that we need to understand right in the beginning. So can you see is it visible for you? Is the screen big enough?
Yeah, it is visible, but I think it's very small. I think you need to.
Okay, let me just.
Sharing from his mobile, I believe.
No, I'm sharing from my. Yeah, is this large enough?
Yeah, it's okay. I think. What about others? Are you able to see?
No, I'm also seeing like a smaller.
Is it big enough now?
Yeah.
Yeah. Now it's
Right. No, it's an iPad, so just that I'll change direction. That's it. Sure. So financial wellness in terms of concepts is something that we need to understand right in the beginning, right? So what is financial wellness, or how best is it defined? It's an intricate balance of mental, spiritual, and physical aspects of money. Now you may think, how many other parts can there be to just money? Of course, there is money. Of course, there are different parts to handling money. One is the mental aspect of it, which means the mental quotient, the effort that you probably put in to kind of save money or probably earn money. Spiritual aspect of it, which is the entire aspect of what India believes in. There are people who even treat money as God, right? We have different names, we have different incarnations to money, both religious as well as spiritual. Then the physical aspects of money. The physical aspects of money is what best way can the money be put in use. So today, while we discuss various aspects, we can touch upon the mental, spiritual, and physical aspects of money. Then the most important thing, we don't have money, or we don't have the ability to save without a specific budget, right? And what is budget? Budget can be defined in 2 or 3 different ways. But the best ways would be, 1, you can only have a budget if you do not go over the budget, right? So you can only save. It essentially means that you can only save money if you do not go over the budget. Third most important thing to understand aspect of financial wellness: never depend on a single income. Make investment the second source. So there is essentially a active income, which is the salaries, or business income, or agricultural income, or any other form of income. The second income will be and should come from the so-called investments. Then the fourth and the most important thing, the best investors, or people who've actually made some money for themselves, or people who have a decent standard of living, are people who do not save from what is left after all the spending, but people who spend from what is left over after saving. And that's the best way of looking at saving. And thereafter, I'll also take you through some investments later. And the fourth important point, the more the money works for you, the less you have to work for money. What does it essentially mean? Yeah, unless and until you put your money to best use, in the sense that unless and until you put your money into active growth investments, and you grow your money over a period of time, and from just making money, once you convert that money into wealth, the lesser you will have to work for money, which means At some point in your career, you may not need to have to work really hard for money in terms of jobs and any other form, and to derive any other form of income. And then budgeting, again, there's another definition for budgeting. Budgeting is telling your money where to go rather than wondering where it went. Now, most of the time when I speak to many people, they say budgeting is all fine, but I really don't know where my money goes. But that's a problem. We have to have a budget and go by the budget and tell the money where the money has to be invested, or where the money has to be kept aside, and where the money has to be saved, rather than saying I've spent all the money and I really don't know where I have spent the money. And last but not the least, for all this, there has to be somebody who would probably advise you, or somebody you would actually look up to as far as advice is concerned. And they should possess something which is a very valuable gift, and that's called honesty. And do not expect it from cheap people. Now, getting into the main part of the presentation. Can you all hear me?
Yeah, we can hear
Am I
you.
audible? Yes.
Yeah,
Yes, yes.
but we can't see you.
Okay, you can't see me. All right. Just a second. Yeah. Now, when it comes to financial wellness, let's understand what's in store, right? So we mentioned about physical, mental, spiritual aspects of money, right? It's also divided into, or it also is classified as social aspect of money. Now, these days especially, and that's the trend in India, because I manage investors across the world. One thing I can tell for sure, India is one country where financial awareness, of course, people know what is money, and that there are options, but then they don't know how to go about it. And they don't really give so much of importance when it comes to investing the money. And like I just mentioned in the previous slide, it's very important to save or invest a large part of the money and then spend only the balance what is left out of it. So that's where the social aspect of money comes in, and the physical aspect of money comes in. How you spend the money, right? Now, financial wellness can be divided into 4 important categories. One is to understand and learn what can be the various aspects of financial wellness. Then plan your budgets, plan your finances, plan your investments, and mere planning doesn't help. You may need to have an action plan to work on it, and then invest the money accordingly. And what is even more important, last but not the least, will be to track the course of your money and how it is in fact working for you, or probably do course corrections as and when you have to do it. Now, let's look at, so I just mentioned about the financial literacy, right, in terms of awareness as a country. Now, there are very many gaps as far as financial literacy in the country is concerned. What is important to note is that a large part of the country, do not have access to financial education, and they do not understand certain matrices called risk, inflation, interest rates, and compounding interest. So I'll quickly run through these facts just for the interest of the audience. What is risk? Risk is the slight downside the investment or the money can have for a shorter span of time or a longer span of time, as long as you stay invested in the same asset class. Now, this is with specific reference to investment, but risk in life is risk, right? Our lives are full of risk, and that's a journey in itself. So investment planning is also a journey in itself. Financial planning is also a journey in itself. And to actually have holistic health, financial health also plays a very vital role. So it is important to understand risk and diversify risk. So in terms of the metrics, let's understand where are we in terms of the country. In India is just in only about 14% of the adults understand risk. Whereas when it comes to Brazil, Russia, Indonesia, China, South Africa, 28% of adults understand what is risk. South Asia outside India, they understand, 18% of the adults outside India understand risk better. And the world is much better off as compared to India. 35% of the adults understand risk. Now coming to inflation. Inflation is the killer, is the devil that eats into all our finances, right? Prior to COVID, India was enjoying a 5.5% inflation. So when to define inflation, inflation is nothing but price rise. So 5 years ago, if you had to spend 1,000 rupees to buy a product or a commodity, today for the same product, you may end up spending 1,600 rupees. So that's the impact inflation does to your finances. So which essentially means unless and until you've had a hike in salary or you've not had a proper investment in place last 5 years ago, you today did not have the kind of money. Yeah, I'm so sorry. Yeah. So can you see my screen?
Yeah.
Yeah. So I was talking about where as an economy we are. Where are we as an economy in compared to the world in terms of risk diversification, in terms of understanding inflation. So inflation, like I said, is nothing but price rise, right? The cost of goods and services over a period of time that eats into our money. So essentially, if you don't have a hike in salary or income, which can come from different sources, you just do not have the ability to buy the same amount of product or a service that you probably did 5 years ago or 10 years ago. Then interest. Of course, many people understand interest because India is largely a saving economy. 52% of the Indians have money lying in the bank accounts or deposits. So everybody today understands what is interest, right? So you will find very few number of people who will say, no, we don't understand the concept of interest rate. Everybody understands interest rate because everybody has a bank account, or most of them have a bank account. Now coming to compound interest. Now compound interest is not something many people understand. Many people understand interest as simple interest. So assuming somebody invests a lakh in an FD today, at the end of 1 year, he knows he makes 5%, which is simple interest. But not many people actually compound that into growth. They do not look at investing money for a longer period of time, thereby growing the potential of money. Assuming an FD gave a 5%, in 5 years, the 5% per annum actually compounds to 6.45% at a 5% on the simple interest every single year. Now, this concept, how many Indians understand? 24% of the adults understand, as compared to people in BRICS, South Asia, and the world. So when it comes to financial literacy, India does not understand large part of it. So it is not surprising that in terms of financial inclusion or in terms of having more people save that kind of money or create that kind of wealth, it's kind of a surprise that many adults in India, even today, don't understand the concept of investments in a broader perspective. And when it comes to the financial literacy among men and women, in the world, 3 out of 4 topics are better understood by only 20% of the population. Whereas across the world, men are less financially literate as compared to women. Now that I definitely give it up for women, because women, it's always told that if a woman is literate, the entire society is literate as compared to a man. To that extent, this is a good news. Now, when it comes to major advanced economies like the US, countries like Western Europe, countries in Western Europe, people understand concepts well as compared to people in India. So precisely why financial education in India has not blossomed as yet. Now, before we actually get into the real concepts of investing, let's understand the economy first. And we need to understand where we are as a country and what is our contribution to the world in terms of revenue, in terms of something called GDP. Now, GDP is gross domestic product, which is in simple terms, the sum total of revenues from all the sectors in an economy minus the liabilities the country has to pay to bring in goods and services for the welfare of public. This is gross domestic product. Now, there are, of course, the data is plus minus a year old, so you can probably take the population of Earth is at 7.2, it's about 7.7 billion people in the world, out of which there are 467 million people who speak Arabic. Chinese is the largest spoken language at 1.39 billion speakers. Hindi, Urdu speaking at 588, English 527, Bengali 250 million. And then we have the other languages. We have Portuguese, Italian, German, Japanese, French, Russian. And this slide is very important. So I will definitely zoom it up for the rest of all of you. Yeah, so as you can see, in terms of the world of languages, you can see that Chinese is the maximum spoken. And then, of course, we should be proud of our languages, but of course, it's not just one language. We have Tamil, we have Telugu, we have Bengali, we have Hindi, we have Marathi. We even speak, some portion of India also speaks Urdu, right? So this is the breakup of languages. Now, why is it important for us to understand where we are and what we do? Because if we have to understand money, we have to first understand our country very well. So precisely the reason. Now let's understand. So speaking of financial literacy, speaking of financial management, financial wellness, it's important for us to understand what percentage of where are we as a country in terms of poverty, right? Now the green essentially denotes prosperity. The darker the green it gets, the better it is in terms of prosperity. And the red it gets, it's kind of worse. So as you can see, Tamil Nadu, Kerala top the chart as far as prosperity is concerned. In terms of it is essentially defined as probably the kind of savings that we have. The literacy, overall literacy also contributes largely to financial wellness, status of living, per capita income, which means in terms of the average gross income minus liabilities that they enjoy. But when it comes to states like Madhya Pradesh, Rajasthan, Uttar Pradesh, and Bihar, of course, you can see that we have a lot of people coming from Bihar and a lot of people from Bihar going into other places to work, because in Bihar, the average monthly salary does not exceed 2,500 rupees. And in Kerala or in Tamil Nadu or in Bangalore, if he gets even 4,000, 5,000 rupees, he is actually well off. That's how he gets the feeling. That's the feeling he gets, basically. Right? Now, let's understand. So we mentioned about where we are as a country. Let's understand in the world, in the total scheme of things, where we are as an economy and how are we faring. This slide specifically, this essentially says this. I can take that for you, though not a very relevant one, but it's largely from this slide. This essentially means, or this basically tells us how India has evolved in to what we are today. Now, the orange graph, if you actually see, is which means in as early as 180, when probably we can probably call it the start of the world, not the start of the world essentially, but looking at the common sense of scheme of things, we can probably date it back to 180. So ever since, if you actually look at it, Indian civilization was the most strongest. if you have to look at it. But over the time, the Indian civilization has actually lost importance, and it's actually decimated over large periods of time. And we are, of course, we have a decent share in the scheme of things in the world, and we are quite consistent. And with the kind of literacy, not just financial literacy, with the kind of literacy, standard of living, financial inclusion, higher standards of living, better schemes for people, better sanitation facilities, and all of that, I think as an economy, we will do much better. But as you can also see, United States was nowhere in 180. And of course, they peaked in 1950 and 1960. And now Western influence to a large extent is reducing, and China and India, today are actually coming up. Now let's understand. This is kind of a extension to what I spoke in the slide, the past one. Today, let's understand what is the GDP in terms of numbers. Now, India accounts to 3% of the world's total revenue. That's a very big number. So this is 2020-21, almost during COVID times. So I don't want to give you a hyperinflated number. This is almost reality, where today, if you have to look at it, 24% of the global revenue or GDP, we call it in economics, comes from United States. And the second largest country in the world is China, followed by Japan, Germany. France and UK is obviously debatable because India is almost there. India almost touched the 5th place, and we almost between 5 and 7 as we speak. Now, quickly to run you through where we are in terms of the market. Many people would have in the crowd should know what capital markets are. Probably some people should be investing, some may not be investing. But what is extremely important for us to understand is, as an economy, in terms of total number of traders in the world, divide by the total number of stocks that they trade in a day, or their active participation in the capital markets, where are we as an economy? We are 131st as we speak. Now, the total world percentage is about 141% market capitalization. 141% is usually percentages is in 100%. But when it comes to market capitalization, it's traded 2 or 3 times because of something called derivatives. So it's usually more than 100%. So if you have to look at it, India is almost down there. So what I essentially mean to tell you is, financial awareness and financial inclusion is only limited to just market participation and not more. But when it comes to the kind of money investors have made over the last 2 years and up to now, just last 1 year return has been 36%, as compared to the US, which has only made 19% growth on their finances. The world global index, which has only made 16%, France has only made 15%, China only 13%, UK, Japan, emerging markets all put together. So as compared to the world, 15.34%, we're at 36%. Now, I will definitely invite people to ask questions and make it all the more participative as and when, because this is more to do with data and, of course, some bit of clarification on points that they may understand or they may not understand. So I'm extremely happy to take questions. So moderator, if you can help me with, if at all there are questions, I'll be happy to answer in between the session as well.
Sure, will do. As of now, we've not received any question. I think we're sweeping into the numbers that you have been displaying.
Sure.
On the...
I know numbers can get a little boring, so I will try to make it a little interesting, but it can get all the more interesting if people also have questions. Anyways, so this is another important so let's understand where are we in terms of household savings. So we talk about financial management, we talk about financial wellness, and most of the Indians, we all know, most of the Indians are comfortable with very, very few asset classes, right? They are comfortable with bank saving deposits. They're comfortable with gold. They're comfortable with property and real estate. So let's understand, where do we stand in terms of how much public sector is spending on gold, how much public sector is saving on savings, as regards to private corporations, households like you and a total in terms of the percentage. So from 2012 onwards, if we have to look at a number, private corporations have actually increased. So if you look at the first part, the first classification of the picture that you see on the screen, you will see that on top left, the orange, which denotes private corporations, they have actually had more confidence in India as an economy, and they've actually invested more, which means invested not just in terms of the FDs or so-called safe asset classes or bonds. They've also invested in capital markets. They've invested in 10-year government securities. They've also invested in their own businesses where they thought, because probably the governance at the center, the policies that probably are in favor of private investments and less of corruption or corrupt practices, I think their investments over time has actually increased. Now, this also happened in the early phase of 2008 and 12. But after that, ever since 2012, this has been slightly on the rise. Now, in terms of the structure of investments, now where have these people actually invested? Large part of investments have come into safekeeping assets, both in terms of gold and FDs. Now, going to the fourth one. So this is I can explain as and when somebody has clarifications on the slide, but otherwise it can get a little dry as we speak. But the fourth chamber, which is down on the right, you will see that household savings are actually reduced over time. Now, why is household savings reduced? Which means their FDs have actually reduced over time. Why? From 2012, FD rates have actually sharply fallen. So from 9% and 9.6% way back in 2012 to 2012, steadily it has fallen. Even in 2012, it was around 8%. And now, as you all know, it's just 5%. Including senior citizens, it's 5.15%. Now, one last part of understanding the economy, it's important that we understand where we are in terms of the economy, in terms of the governance, and how many marks can you give the government in terms of running the economy. So we are currently focusing on manufacturing as a country, and again, just to quickly add, it's very important for people to know and why they should invest the money in the first place. So this is essentially the first part of financial wellness, which is learning. So this part of the thing is 50% of the job as far as an investor is concerned. So learning or understanding the economy well is very important. So from that standpoint, understanding how we are faring as an economy is also very important. So manufacturing. Now, India is currently targeting Make in India, right? Now, prior to COVID, most of our products that we used in India was largely imports, because except for agro commodities, except for finished steel, except for fiber related products, except for spices, textiles, we practically did not manufacture, so to speak. So in terms of manufacturing as an economy, we were way behind. And of course, after COVID happened, a large part of India's focus is on manufacturing medicines, improving capabilities on diagnostic, on healthcare, and overall wellness of people. So manufacturing plays a very vital role, and it is 25% of the GDP. Now, I'm sure with so many slides, people have understood what is GDP. GDP is the total of all revenues that country gets minus of the liabilities. So as we speak, 25% of India's revenues come from manufacturing, which is a very big number. And we have actually improved with time. So as in the slide, so 9.7% over August, and we are almost at par at that level. We are at about 10.3. Now, India is actually targeting a 5 trillion economy from just 3 trillion. And I mentioned we are in the 7th spot or 6th spot as we speak. We are just at 3 trillion, and we are just behind France and UK. And the challenge is that our agricultural produce is kind of slow. Though we used to be calling ourselves an agrarian economy, our agricultural output is low as we speak. This is largely because of climatic conditions. Our weather patterns have actually changed over the years. India has not been able to adapt to green energy policy. Nitrogen fixation reforms has not come in. A large part of felling of trees, fuel utilization is also one reason. And we have not actually scaled up our capabilities on the pesticides and chemical fertilizers. So now, India has actually slowly improved. So that's the reform that we probably see with COVID. With COVID and the oncoming of COVID, the focus has actually changed to this. Yeah, so this is the manufacturing aspect of it. And here is the financial inclusion. So the third aspect of what India is actually focusing on is financial inclusion. All of us have experienced the hardship during demonetization, right? We've had to stand in queues, some in many cases kilometers and kilometers. Some people had to just to take some money from a bank account, had to wait for 2 days, 3 days. But it has actually been a kind of at least 30% of the impact of demonetization, I would say, as far as public is concerned, is slowly you can actually see it surfacing now. Why? Because from just being a cash economy, for expecting payments in cash, buying things in cash, or spending in cash, demand and supply was largely cash, the real estate was largely cash in the country. But after demonetization, the usage of cash has come down by about 19%. And Aadhaar today, as you can see, is linked to all your probable daily utilities, which is your Jan Dhan Yojana, for as well as the poor people are concerned, people within a specific poverty line, they are mandated by the government of India to have Jan Dhan bank accounts. Jan Dhan being obviously wealth, people's wealth in the hand of the people. So that's why they have the name Jan Dhan accounts, which largely the PSU banks sell. Then Aadhaar and the mobile has become a very important part of the banking system. So today, if you have to open a bank account, you need to practically have a telephone, and at least 40% of the cases you need to have a touch phone or an Android phone, so to speak. And last year, 2020-21 alone, there are 10 million new demat accounts open. Now, what is a demat account? Demat account is the account that you probably open to trade in shares or to buy stocks. You need to have a demat account. Now, demat is a short form for dematerialization, right? From paper form, you demat it. That's why it's called a demat account. Likewise, bank deposits grew from 2.8 trillion to so it's actually grown up to 2.08 trillion from a little under 1.46 trillion prior to COVID. Now, World Bank estimates say that 80% Indians own a mobile. While this is what is factual, but if you have to look at it in terms of the number of people per population, it's still just 4.5 people for every 10 people, which is only 45%. So which means India has all the more opportunity to push mobile sales in the country, and that will actually result in helping them opening more bank accounts and using all possible services that the government of India has to offer. Now, these are important, but quite complex, I would say. Financial inclusion, taxation. So taxation is also very important. Without taxes, we wouldn't have the leverage to even sit and talk today, or even pay the public servants in the country. So taxation plays a very vital role. From the year 2009, India's tax collection has actually improved, and it has actually drastically improved since 2014. From just under 1.46% of 128 crore people in the country, today 8.76 people of the country pay taxes. Now, you may think it's only 8.76, but 8.76 in a gigantic country like India seems to be a big number. Any questions as yet? Or can we just...
Yeah, we would also like to know what would, I mean, just wanted to talk on this.
I know, it seems that you're the only person asking me a question. All right.
So I think, you can post your questions in the chat box, because I think it's muted. All of them are muted, I think.
Okay.
If anybody would like to ask question, you can just raise your hands and put it in the chat box.
Sure. Yeah, sure. So, sorry. So what was your question? Was it a question? Or...
we just wanted to know what would be the smart options, because the teachers or educators have got limited options for saving. So what would be the smart options for...
Yeah, so the popular options that all of us know for saving, the popular options, I'm only talking about the popular options, popular in the sense that what they have understood or that what they have done till date are probably limited to just bank deposits, right? Even gold in the country is considered to be a saving, which I do not agree to. But gold is something that needs to be only treated as something that should be used from a cultural perspective. But many people use gold as a saving tool or an investment tool. But so the popular options have been FDs, gold. Some people also invest in PPF. And of course, FDs also include RDs. And very little or very small part of the population invests in stocks, and some also invest in mutual funds. So this has been the economic spread as far as investment options are concerned. So like you see on the screen, bank FDs, public provident fund, NPS.
Dr. Could you please stop the screen share? I think Mr. Manoj is sharing something.
Can you see the screen?
No, you have to share it again.
Okay. I thought there was another request for sharing in between. So I was wondering it was getting shared. No? Sorry about that.
No, it was shared, but I think it just got mixed up.
Okay.
I think I will post the questions to the teachers. I mean, all of you. What are the options are you looking at? Because we look at a lot of mutual funds coming into the markets, shares in stocks and cryptocurrencies and so many things. I mean, if you could just quickly, give enlighten us with those areas. We get carried away with a lot of stuff in the market right now. Saving options, yeah.
Right. So yeah, so can you see my screen now? Yeah, so can you see? Yeah. So as you can see, these could be options that most of the teachers or educators should be investing as we speak. So there are bank FDs, public provident funds, NPS, but most of the investments made into this, leave aside bank FDs, but the investments made in public provident fund, NPS, national savings certificates, and all this. So you needn't consider from 5 and below. It's only the first 3 that I'm mentioning are essentially from a tax saving perspective. A large part of investments made by educators or any investor for that matter is purely looked at from a tax saving perspective. And that, I believe that's not exactly how it should be looked at. Then coming to the point number 8, which is also unit linked insurance policy. So many people right from LIC to a lot of private players in the market also sell insurance, right? Saying you need to pay, say, 20,000 rupees a year, 50,000 rupees a year, just pay for 5 years. It's only logged in for 5 years. Thereafter, you get this money for lifetime or whatever. That's called unit-linked insurance policy. And then there are mutual funds, and then there are stocks. But in between, I'm point number 5, sovereign bonds, and of course, people understand real estate and property. But here, I've also briefed. So these are habitual investments, what people are habituated with in the country today. So here, if you have to look at it, let's understand the lock-in period. Bank FDs do not have any lock-in. Is there a tax efficiency? No. Is there an investment risk? Of course, no. Is there an inflation risk? Yes. I mentioned about inflation, right? In FDs, if you earn just 5%, the average inflation in the country today is 7.8%. The latest data that has come out is 7.8%. So if you have an FD at 5%, practically in just about a year, your money or your saving does not have value at all. Now, public provident fund, there is an inflation risk, but yes, you get a tax benefit, but it has a lock-in period of a 15-year horizon. NPS, there's a lock-in period up to age 60, but you get a tax benefit. Is there an inflation risk? Yes, but approximately how much you get? 8%. Likewise, I've mentioned national savings certificates, sovereign gold bonds, real estate property bonds, ULIPs, mutual funds, and stocks. Now, here I would slightly emphasize mutual funds and stocks. Though I mentioned people are not really aware, not many people are investing. For the benefit of people who are investing, they have done something good, at least to begin with. Why? It does not have much of a lock-in period except for just the first. It's not a lock-in period even for the first year. It's just that if you end up selling your mutual fund unit or a stock less than 1 year, then on the gains that you make, right, you end up paying tax at 15%. It's called short-term capital gain tax. Not just that, there is a income tax component. So assuming somebody has a 10 lakh kind of an income, right? And if that person is selling, what happens is that person also ends up paying more tax on the income because that's considered as income for income tax. But if the investor is a long-term investor, going to the 5th column, approximate returns, it can be in the range of 14 to 15%. So which means, does it double? Of course it doubles. Mutual funds and equity on an average doubles in 5 years, 5.5 years, right? Now, these are the popular options. So, and I've also mentioned in remarks what I've just mentioned. So why the mentioned investments on top, conventional investments are not great options if you have to look at it, and why mutual funds and stocks will be good for an investor. But these are habitual investments. I've just mentioned this slide from that perspective. Now let's look at smart investing. What will a smart educator want to invest in? First, to begin with, it's not just about investing. It's about money management, right? Financial wellness essentially needs to arise from the fact that they have at least some money in hand to invest. Though I have all this while mentioned that we need to invest, there are multiple options and everything. Not many people in the teaching fraternity who are essentially teachers. I'm not talking about people who are upper primary school or people at the principal levels or lecturers. No. Essentially, teachers at beginner levels may not have the kind of income to kind of look at saving in the first place. And then, of course, without saving, there's no investment. So for them, it's always important that they have something to start looking up to, which is called floating rate debt funds. Now, what does it do? It essentially gives 3 to 4% more than the money that you keep idle in the bank account. And it is, like I've mentioned in the column in the remarks, it's a better alternative to idle funds lying in the bank savings. And it's always a better option compared to FDs. And it's a smart way to plan short to medium expenses. So if somebody knows somebody's got 10,000 in the bank account, right? And that's essentially kept for some short-term expenses or medium-term expenses. It's always best that they move that money into something called the floating rate debt funds, so that they get slightly higher rate of interest. And if they need to withdraw the money, this money is available. Then the second option, it's called peer-to-peer lending. No, I didn't.
Sorry to cut you. What would be these floating rate debt funds?
Yeah, so floating rate debt funds are essentially, they come in the category of mutual funds, but they are not. They have nothing to do with investing in stocks or shares or anything to do with risk. No, they essentially invest in money market instruments. They invest in something called short-term government securities, short-term corporate deposits. It can range from 15 days government securities like treasury bills, and it can actually go up to, say, 120 days to 180 days government securities or corporate bonds. These are floating rate debt funds.
So anybody who wants to invest, first of all, they have to have a Demat account.
Not required. Absolutely not required. Demat account is only limited to the so-called share purchases or stock purchases or share trading. If you have to do futures and options, if you have to buy and sell shares, only then you actually need a Demat account. Or if you have inherited your father's shares in some old company and the old name and it has been paper form, then if you have to convert it into shares, then you need a Demat account. There are a hell lot of paperwork that one has to actually go through, and that kind of money, that share certificate has to be dematerialized. So that's where Demat comes in the perspective.
If
Demat.
anybody wants to invest in these floating rate debt funds or the mutual funds that you say, so where do they get into? How do they get into?
It's a very simple process. If somebody has to invest in floating rate debt funds or any short-term parking mechanisms in the mutual fund space, they just need to do something called a KYC, Know Your Customer, which is something that as an organization, we also help. And organizations in this space, it can even be a banker, it can even be a broker, but they would only help you initially from the KYC perspective. The quality of advice can be a question mark, but I'm talking about people who practice this. People who actually advise this can be portfolio managers like ourselves, can be even bankers for that matter, can even be brokers who open Demat accounts for you. All these people are well equipped to help you with the initial KYC process. So once you do the KYC, you need to do something called an online account opening format, which is all this process takes only 15 minutes to begin. It's just a 15-minute exercise that one needs to spend in the interest of their own financial wellness. So that's how floating rate debt investments are made. And if you have an Aadhaar or if you have any address proof, you have a PAN, and if you have so these are the documents. The documentation is this. You need to have a passport size photograph, probably a PAN front and back Xerox copy, preferably Aadhaar or any other union government authorized ID proof is welcome. With this, you can do the KYC and you can open an investment account.
Okay, thank you so much. There is a question from Dr. Prasanna who is asking, so can you also explain about SIP?
Sure, I can. So can I answer this question immediately after peer-to-peer lending? The second point. The third point, obviously, is mutual funds. So I'll quickly run you through the second point, which is peer-to-peer lending, and then I can take the third one, if that's okay with you.
There's also one more question. Can we do it online? I think Ms. Meenakshi wants to find out whether investing in mutual funds can be done online.
Of course.
Or the KYC can be done online.
All right. All these as a process can be done online. In fact, the country has also progressed from just physical documentation to completely online process. And as an organization, we have completely adopted. It's completely online, 100% online. So if you have a proper verified Aadhaar, and if your mobile number is attached to the Aadhaar, and if you possess a mobile number which is tagged to the Aadhaar, it just happens in 5 minutes. The online KYC is just a 5-minute process. Yeah. So I'll come to the third, what Dr. Prasanna's the question he asked me. I'll just come to that in a minute. So peer-to-peer lending, the second point is also very important. Today, if there is a small business, assuming there is a somebody who's selling he's got a pastry shop, right? And the pastry that he sells is quite famous, and he has to expand, right? And there are many companies these days called Lenbox, Faircent, OML P2P, and there are these online app-related platforms, e-commerce-related platforms, who take investments in very small quantum. In something as an investor can invest as low as 25,000 rupees, 50,000 rupees. Now, what happens here? I'll tell you. You do a basic KYC process, but then their KYC is different. That's not the mutual fund KYC or the DMAT KYC that I'm mentioning. There's a small KYC that these people have as a business. So you do a basic KYC, you give them your ID proof as address proof, log into their app. And once the KYC is done, right, you can immediately put in money into Lenbox or Faircent or OML P2P. And they take the money, and that money goes in as a small short-term loan starting from 3 months to 24 months. It can go to the same person that we just mentioned, the person who sells pastries. Assuming from one shop he wants to branch to maybe 4 shops, and he probably needs 1 crore to branch out, right? At that point in time, Lenbox and Faircent and OML, they bring in some offers online, and people can actually go in and invest. But is there a degree of risk? Of course, there is a degree of risk. The minimum investment can be 25,000. It can go up to 10 lakhs. And but how much can you expect in terms of growth? 8.5%. It is risky, of course, but then something in the range of 8.5% or slightly more. Is there an inflation risk? No, because you're beating inflation, right? 5% average, 5 to 7% inflation. And if you're holding for a longer horizon, then you are making slightly more money than inflation. Then coming to mutual funds. Yeah, so within mutual funds, so I'm sure many investors in the audience would know what mutual funds are. Mutual funds are actively managed funds collected from investors, invested by a fund house, right? And invested into multiple assets. It can be equity, which is share or invested in companies or businesses in the form of shares. It can be invested in bonds. You can invest in gold. You can invest in international equity. You can invest in when I say international equity, we talk about Google. You can invest in Alibaba. You can invest in any company globally, right? We call them FANG: Facebook, Amazon, Apple, Netflix, Google. All these companies one can invest in. So all this is possible these days through mutual funds. So, but what is it for the investor? The money is collected from the investor and invested in these businesses, and the growth that comes in, right, after a small expense that the fund manager will collect annually, the money is completely paid back to the investor. So it's a win-win. It's mutual. That's why they call it mutual funds. And yes, to explain SIPs, systematic investment plans, which is the SIP is basically the abbreviation for systematic investment plans. Systematic investing is a method of investing in the so-called mutual funds. Like we have recurring fixed deposits, which over a period of time, now we call it RDs, right? Recurring deposits. It's only a method of investing into an FD. Instead of investing at one go, you invest monthly, or you probably have quarterly or whatever. So likewise, systematic investing is a systematic way of investing, either daily or probably monthly, into a mutual fund. The advantages of that will be that an investor is able to average cost as much as possible, right? So assuming today I buy, say for example, a HDFC mutual fund at say 10 rupees. So mutual funds are always denoted in net asset value. If somebody is investing in 10 rupees and the market goes down because of inflation and the global crisis, assuming it goes down to 8 rupees also, if you're doing an SIP, the next month you're buying the same 10,000 rupees that you started the first month, but you're getting units at 8 rupees. So what happens? You get more units, right? You are able to buy more at a lesser rate. Yeah, so that's SIP investing for you. Hope that answers Dr. Prasanna's question. Yeah.
Any other
Then,
questions? Anybody has any question? Ms. Rajini, would you like to ask a question? I think we'll carry on, Mr. Manoj.
Sure. Right. And then the fourth important smart option for educators these days, it's, I firmly believe that money should not be limited to just one or two assets, like conservative assets, or not just mutual funds or stocks or anything. This, of course, stocks, but in a very structured format. So there is a structured format of investing in stocks. It's called small case. So there is a new a company which has started 3.5, 4 years ago in Bangalore. They've actually identified that many retail investors, which means small investors, people who have probably income of maybe 30, 40,000 rupees and below, right? Who may also want to try their hands in stocks. But of course, they understand investing in stocks is a very risky affair, and you can probably burn your hands, right? But through small case, the advantage is there are small portfolios. So when I say portfolios, even if you have 10,000 rupees, instead of putting all your money into one stock, and if the market goes down, you can lose all the money, right? But the same 10,000 rupee budget, the investor can invest in 5 or 10 stocks within a portfolio. Now that portfolio is well researched. The portfolio comes with a certain assured return. I won't say assured, predictable return over a 2-3 year horizon. And it is good for a small, smart investor who wants to even start with 10, 15,000 rupees and then multiply it by 5,000 rupees every month. The advantage is in markets like this, investors can actually unlock the potential of the growth of their money. So from if a educator probably in this group has say 50,000 rupees lying in the bank account, right? And they feel okay, they don't have any debts on that. Even if they have debts, they still have about 40,000 rupees that they can spare. They can easily take about 10,000 rupees from that and buy into. Initially, they can start with probably a floating rate debt fund. If they want to just try the waters, they don't want risk at all, they can probably start with floating rate debt funds. But if they want good growth, and if they want a good portfolio, and if they want to participate in the real market fall, which is already discounted at 18%, then equity mutual fund, or much better will be a small case to begin with, if they can afford risk. But then they have to at least hold for at least a year plus, right? Because only if the markets are cheap, they should probably invest. And if they can stay longer, anything in the range of 2 to 3 years, then obviously they make very, very good returns. Now, does it beat? No. So in a small case, you kind of make about 17% per year, and it beats inflation also. So there is no inflation risk. Then there is something called Reit, Real Estate Investment Trust. Now, these are, again, this is traded in the exchange. In fact, real estate investment trusts are trusts through which an investor can invest into real estate companies who take the investor's money and invest in commercial properties or other properties, properties which are essentially for our own public consumption. So likewise, so you have 3-4 names in the country. Prominent ones are Brookfield India Reit, there is Embassy Reit, there is Mindspace Business Reit. Now, the advantage is the tax, because the shareholders who have invested in the Reit, since they get dividends, right? And since the dividends is actually the tax on the dividend is paid by the company, the so-called Embassy Reit or Brookfield India Reit pays the tax on the investor's behalf. So when you get money in hand, it gets a little tax efficient. But then you can't expect anything beyond 11% kind of growth. And the minimum investment starts with 50,000 rupees. So it's quite reasonable.
Rosama has some doubt. Ms. Rosama, you can unmute. Okay, I think you can continue. Sorry. She just raised her hand, so I just thought maybe she had some doubts.
No, sure. I mean, it's good to have questions so that so that I can explain these things better. And then, the sixth smart option for educators would be the latest newly launched uh, investment into bonds, which the government of India recently launched through the RBI. It's called Retail Direct Gilt Investment Scheme. Now, what is gilt? Gilt is nothing but investing in government securities. So you are investing in government securities directly, and you can invest as low as 10,000 rupees. But how much return can you actually make out of it? It's just about inflation. It's about 6.36%. But for a small investor who does not want to take risk at all, but wants to go directly the government route and wants to stay invested for a very long horizon, then for an investor like that, this makes sense. But for that, yeah. So you can probably need to invest through the demat account. If you have a demat account, you can invest through the demat account. As far as the retail direct gilts investment scheme is concerned, and where is all this money getting invested into? It gets invested into treasury bills. It gets invested into state development loans. Now, treasury bills, we all know that basically every state will have a treasury, and they have a certain bill to pay in terms of the debt they have to. So if the state of Tamil Nadu has a company called Tangetco, and Tangetco is nothing but the electricity company that the Tamil Nadu government runs, right? And we all know that Tangetco is running in losses for the moment. So there are bonds that investors can invest into Tangetco at a very low rate of return. Okay, so what happens is you are also supporting the government. So the investor can invest into Tangetco, and the Tangetco will take money from the investor through the open market, and they pay their debts. At the same time, they can get debt-free over a period of time, and the investor also keeps getting his interest. But the interest rate will be extremely low, and therefore there is an inflation risk. Yeah. So these are essentially smart options that investors should be looking for as far as investing in the country is concerned. So with this, I essentially come to the end of the presentation because yeah, I think the screen sharing is gone off. Just a second, hold on, please. Sorry, hold on, just a second. Yeah. So if in case people need the slide, I'm happy to share. But these are the smart options for educators in the country today, especially for investors who find it extremely difficult to save. That's a very important point to make, because educators in the country are in the average salary bracket of 35 to 50,000 rupees. It doesn't exceed that, right? So for an average investor, it's important that they have their options. So these are the best smart options if a teacher at a primary level or mid-school teacher would definitely want to prefer as far as investments are concerned. So these are the best hand-picked options that they currently have. But of course, there are these conventional investment options that they would have already done. But mind you, all these assets do not grow. Or even if it grows, it doesn't beat inflation. So practically, you may think that your money is growing, but not as much, except for the 9 and 10 options, which is basically mutual funds and stocks. ULIPs, some people who would have invested in unit-linked insurance policies 10 years ago, they would have made some money with the market. But again, the lock-in period is extremely high. People who invested in real estate from early 2000 till about 2010, 12 probably would have made money. But thereafter, they've not made money. And anybody investing in real estate today also, at least for the next 5-6 years, will not make money. The fact that it is actually getting structured, government is bringing in a lot of reforms, and a lot of cash in the real estate business is sucked into the system. And now real estate is not attractive as we speak. Yeah. So these are the options. And I'll be happy to take any more open questions, because if it's all the more interactive, it's still better. Thank you so much.
Thank you so much, Mr. Manoj. I think there have been lot of information on this session, right from the history of India and how it moved on, and how the economy has rocked. As you know, India is getting into one of the most stable economy as of now, and I think the teachers will have a lot of questions, queries, but I think they are also a bit confused on what to ask and what to note on. So, if any questions, I think we just unmute and ask.
Sure. Just a second, please. Just a second.
Hello, sir.
Yes, ma'am, please.
Hello, madam. Is there any age restriction as such to invest?
Absolutely not, ma'am. Absolutely not. I'm glad you asked the question. Any investor. So our youngest investor is, of course, the investor will invest as a minor. So the youngest investor, anybody who is newborn, can start investing under the guardianship of the parent. But otherwise, for a major, 18 years plus. So there are no age restrictions.
Okay, sir. Thank you.
Yeah. Right.
Anybody else would like to ask any question?
And he can share his details also, Shalini ma'am, so that if anybody want to contact sir, they can directly
Sure, sure.
contact him and clear their doubt.
Just,
Normally in the public platform, people don't ask much questions.
No, I mean, so ideally it should be, of course, they don't need to, they can obviously switch off the video and obviously ask questions. It's very important that they ask because financial literacy is something that you need to get off inhibitions and ask, right? So only then they also kind of prosper. That's the best way to look at it, I would say.
a lot of thanks and for the informative sessions. Well, there's a question from Ms.
What is the best
Iyengar.
option? Yeah.
Yes.
So was it, what is the best option? So for somebody at the age of 50, it's not just the age. At the age of 50, if the investor has the ability to invest, hold on to the investment for a period of less than 5 years, then probably, there are, of course, you can get into basic mutual funds. You can have within the mutual fund category, you can have, since you're already 50, probably you can have 20% of the money in fixed income funds. There is a category called fixed income funds. Out of the fixed income category, I mentioned about the floating rate debt funds. So you can probably have 10% of your money in that, as compared to keeping in the bank account. You can keep it here, so you at least get a 6% kind of growth. Some portion of the money can be into FD kind of assets within the mutual fund space, and the balance can be into equity funds, equity mutual funds, and that will obviously grow over time. And if you feel you can take a little bit of risk, then probably you can invest into the small portfolio, like a small case that I mentioned, which is also a very easy investment to make. Pleasure.
It's been a long session. Actually, we just have a 40-minute session and 20-minute question answer session. I think investment is always a hot topic across ages
Sure.
and across professions.
Sure.
So thank you so much, Mr. Manoj Mullat, for coming and spending a valuable time with teachers and educators here. And of course, if you could just share your number and maybe in the chat box, maybe they can get back to you in case of any doubts or clarifications.
Sure. I can do that. I can do that. So I'm available on that's my number. I've just said my number on the chat box. If that's okay.
I think we haven't received the number.
Yeah, I think it is. I've replied to a message.
For the mail ID also will do, sir.
Sure, no problem. You can write to me at there you go. That's my email ID. So please feel free to write to me.
I think you're messaging to somebody. You should message to everyone. You have to
Message
click
to
on that
all
option.
option comes
Message
in
to
that.
all options.
Oh, probably that's the. All right. Sorry about that.
So that same person can actually share it also. Don't
Yeah.
overshare.
No issues. Yeah. So I kind of realized it's only gone to one person. Sorry about that.
So Shalini ma'am, you can wind up the session. Meanwhile, he will be.
Yeah, sure. So I think if you buy what you don't need, you steal from yourself. Goes the famous proverb which says, uh, if you buy what you don't need, and then maybe your future is saved. You don't have to take it from your future. And it's wonderful to have you here. Uh, we
Yeah. Such a
receive
pleasure.
we receive the remuneration of our efforts in the form of money and or anything else that we deem of value. And this exchange of energy and efforts is what is actually known as the business aspect of life. And
Right.
so, putting your effort into maximizing your money and patiently waiting for your wealth to grow is very important. So, I think it was a very informative session, and let's effectively put into use our wealth and let's patiently wait and help, maximize its growth, which is very important because we keep it for, wealth is, used for so many aspects, be it education, be it on medicine or be it on, God forbid, not medicine, of course, but still, those are the, being India being one of the most consumer country, I think we don't know how and which area money gets utilized. So I think we need to use it effectively. So thank you so much for this session, and maybe we can have series of sessions in case it demands. Thank you so
Sure.
much. Thank you, Dr.
Thank
Srisan.
you. Thank you once again.
Everybody
Thank you so
for
much. So
joining.
I have requests for the link. So when they say the link, they want the presentation is what they mean.
No, they mean the feedback link, they get a certificate.
All right.
No,
Sure.
yeah.
All right. Right. Sure. Thanks. Thank you so much for the
Thank you.
invite. And thank you, Mr. Sreesan and Mr. Shalini Menon for the invite. Thank you so much.
Thanks. Wonderful.
Thanks. Thanks. Bye.
Vande Guru to you all.
One day.